All right, welcome everyone to today's lesson. Now, the market today is going up completely, as I expected it to. It was bound to happen. Now, there was still potential that the price would go down, but I did tell you that the price would likely be responding towards the 20 moving average. Okay, and if we look at the Dow Jones is doing the exact same thing. The Nasdaq is doing the exact same thing. So the entire market is completely going up today. It had a huge gap, and there's still yet more to come. The market hasn't completely closed yet, but looking at this pattern, I'm pretty sure we'll see a few more rises in the next few days. But as I said, you'd still want to be a little bit, I'm not saying extremely cautious, like very conservative, but you do want to be cautious of, if we go up a bit more, there could be a bit more possibility for the price to go back to the average. Okay? So that's what the context of the market looks like. I want to look at Finvis right now so we can see the total context of the market. I just want to see how companies are performing. So as you can tell, and we can look at it from a group standpoint, the sector that's performing the best right now is technology. The second is consumer cyclical, which could be Amazon, Nike, or Adobe. Communication services can be Metaverse or Google. And then you have healthcare, financial, and industrial. The one that's performing the best right now is tech, which one of the biggest companies right now in the entire world are tech companies specifically. So that's interesting. Now, looking at the market as it is, what can we do right now with the S&P? The S&P is going up, so I wouldn't say you would want to be exactly trading right now in the on the S&P, but you could be trading the companies inside the S&P. Same is said for the Nasdaq. If you look at the Nasdaq, in fact, it's pretty much the sector that's performing the best, because what comprises the Nasdaq mostly are tech companies and consumer discretionary. So that's what makes this price rise a bit more. Also, I realized that the price is pretty close to the 40, which shows that it did respect it, and now it's going up. So that's a good sign. For the Dow Jones is going up, and it did respond towards the 20 moving average. Okay, so you can see that the moving averages are really behaving as they should, and the prices are respecting them as they should as well. I want to see the S&P 500 on weekly, and you can see that there's now a bigger rise. On monthly, it's the same thing. Probably doesn't look as big compared to weekly or daily, but it is rising nonetheless. Okay, so I want to talk about today specifically. We've been talking for the past few days about trading, but I do want to talk about investing now. So let's talk about the elephant in the room, and that's Nvidia. Nvidia has had a very interesting uprising over the past 2 years. If we look at this, look at Nvidia. So this is Nvidia's market cap. The market cap currently right now in Nvidia is $1.9 trillion. But if you look at since 2022, Nvidia's market cap was $400 billion. Now it's almost $2 trillion. You might be scratching your head and think that, how is this even possible? Well, look, Nvidia has had a interesting history. Over the past 5 years, or let's say over the past 8 years, Nvidia has been focusing so heavily on chip manufacturing. And inevitably, that they've been so involved in hardware with chip manufacturing, they've been also interested in data. And because remember that data doesn't just run throughout thin air, and it needs something that can power it. And that powering has to do with more advanced chips, right? And more advanced hardware. You need more computing power to do that. Nvidia saw the opportunity in that, and so hence when they knew that this would require more computing power and technology in the future. They knew that the world was adopting a more accessibility towards data because everyone has an iPhone today, everyone has a computer, everyone is connected to data, to each other. And that's a gold mine for internet companies because you're able to retarget advertisings and relevant product values to those users. And Nvidia, because of this data, saw that opportunity and they decided to invest and acquire several small companies that were involved in artificial intelligence. And so, from Nvidia's strategic standpoint, they've been able to build an empire slowly behind the scenes. However, it was pretty obvious if you were a person inside this sort of industry that you could have seen that Nvidia was a behemoth. I remember, and I'm going to give you some backstory. I remember early in 2019 and 2020 when Nvidia was had a market cap of 160 billion. Now, I would say that was years ago. And that was actually 4 years ago, 4 to 5 years ago, that I did not think. I knew that Nvidia was going to grow a lot, but I did not think that Nvidia would be 4 years later at almost $2 trillion. Just to give you a way to think about that, Nvidia, if you invested, let's say in the market cap just perspective, if you invested in this, you made 1 to 20 from here in 4 years. That's literally 5 times per year on average. That's an enormous investment. Okay, so that's the primary reason why Nvidia has grown a lot because they did a very strategic decision. Now, why did Nvidia though rise so much from 2022 until now? Well, it's because of this. One, in 2022, macro events led to many companies' stock price to fall down a lot despite their valuation. So even though Nvidia was making more money and was investing back in their projects to create more value in their products and services, which makes them more valuable as a company as itself, still the market was pricing the business, pricing the stock at a lower price as time went on. And so what happened was, so you can understand that a lot of the times when there's a macro event, people sell. In fact, every time people sell, not because the business is doing bad or better, but people sell because other people sell. So why in the first place are people selling? Well, it's because let's talk about first hedge funds because that could be a more logical way. If you look at it from a hedge fund perspective or a mutual fund starts to cut and trim their positions in any of these sort of companies if they know with in their analysis, right? Because this is all mechanical and they have computers. If the computers and algorithms tell them that the market price of the whole market would push these stocks to go down, it wouldn't be profitable for the hedge in the short terms for their clients. So they need to cut those trims so they could still maintain their return in their portfolio. So it's not because the company is doing bad and it's not going to do well in the next coming years. It's just because of a strategic standpoint. But a lot of retail investors don't understand that. So when they see these declines in the price, they sell more. And these hedge funds do that intentionally because they know if they sell and these other people sell, what are they going to do? They're going to buy back at a cheaper price because if they trim their positions, right, and if they know if they buy at a cheaper price, it's more likely that even though they can't predict the bottom, nonetheless, if they keep averaging their position as time goes on, they're able to make a better investment as those prices start to recover than rather cutting the entire trim position and reallocating to another company, unless if they find that the other company is making a better return. Okay, so that's one. That's very important because that's the same thing what happened with Amazon. All right, Amazon was reporting. I remember back in 2022, it was right here. Amazon was falling in 2022 because they were making less money. They were investing a lot of their cash. They accumulated a bit more debt. to invest in other projects, and because their Amazon e-commerce business wasn't doing well, a lot of analysts and a lot of these hedge funds, now that you understand it, trim their positions. And on top of that, some hedge funds didn't even decide to trim the positions. They just sold it because they didn't believe that Amazon would be as profitable in the next years, which is not true, because Amazon in these years were investing heavily into their future products and services, like valuable products, despite many numerous layoffs. You need to recall too that Amazon is a very autonomized, systematic company. Jeff Bezos, which is not the CEO of Amazon anymore, but the culture and ideology of Amazon is always revolved around automation. So it makes sense that they want to lay off so many people, because they believe a lot about automation to replace a lot of human labor with computing labor, that they can automate that process. And so they use a strategic funding reallocation, that they're not profitable on their Amazon e-commerce website, but that doesn't matter because they've never been profitable in their e-commerce. They've been always profitable in their cloud, Amazon Web Services. They've been always making money in that. That's why they're so highly effective with artificial intelligence, because they've been backing it up for since 2000. So it's the same thing with, we're looking at Amazon and looking at Nvidia. It's the same context. It's macro. It's also because of this new boom in the AI. And I remember in ChatGPT, I think ChatGPT was released in November 2022. So who are the predominant players in artificial intelligence? Well, obviously Nvidia. And what was Nvidia doing in 2022? They were investing heavily in these projects. So it makes sense, right? Now it makes sense, guys. The price has been going down a lot. It's been very mispriced. Interest rates were going up, making shorter companies to fall down and have to pay more in their expenses. But Nvidia didn't have problems with that. In fact, it was better for them, because if smaller companies are struggling a lot in their pockets because they have to pay their expenses, it makes room for bigger companies to buy them out, right? That makes sense. So that's why all this stuff is a reinforcing process. And remember that a company, any company that is public, they are allowed to repurchase back their shares. So they can push the price if they want to as well, right? So there's a lot of reasons you can tell. This was so blatantly obvious in October, but you want to know why no one was saying that? Because that's the problem about the market forever. It's going to happen all the time. Every single time when there's a bear market, no one is brave enough or confident enough to be sure that the market is going to be at a better place in the next few years. Not because of hope, but because of logistics. It's because of statistics and because of fact of the business, of history. It does not make sense that Nvidia should be this mispriced when they're making more money. So that's the point about investing, right? That's literally the whole point about investing. The whole point about investing is that whatever price someone is giving you, they are incorrect on what they're pricing. And what you priced it based on your facts, based on your analysis, that's your decision alone. But if you based upon it at facts, it does not matter how many people sell or who sold that company. Your facts are the facts, and everyone else's is the way how they analyzed it. But your facts is facts, and you need to stick with it. That's why in the market you need to have an independent thinking, and you have to go against the crowd, because the crowd is almost all the time wrong. That's what happened here. Everyone is going to give you excuses when there was just a bear market, and now the price is rallying, quote unquote rallying, now starting to bottom. Everyone's going to make an excuse that, oh no, but Nvidia has too much expenses. Their earnings are not as are going to be as high. Their profits are not going to cap up more. All those are excuses, and they're not looking completely at what caused this to come down. So this is important. Now, Besides all this, right, because I already went all the way up and I actually had, well, I had correlations with Nvidia, but looking at Nvidia right now, what can you do right now with Nvidia? Well, Nvidia is going up, right? What I want to do right now is I kind of want to give you a very I want to give you a general view of how Nvidia is looking right now in terms of its statements. So let's dive into that today. Okay, so let's look at first the way how we look at this is I usually like to get my sources from Guru Focus, right? Of course, you can look at the 10K, but for this case, it's simpler. So if we look at Nvidia, all right. So what's important with any company now that I look at is that I like to see consistency in their statement. What's consistency? Well, I like to look at really three things. One is uh, whatever company I'm looking at, there has to be a consistent stream of revenue. So that means each year the revenue has to be going up. But I would say that what's important is that it doesn't have to be every single year that it has to be higher than the previous year. What's most important is that the past 5 years in overall has been rising. So even though, let's say, like if this year was lower than this year was the same as this year, but this year it was higher, but then this year it was the same as this year, that's still going up despite the fluctuations, right? So the revenues has been steadily going up. Their net income has also been overall going up in the past 5 years because you have higher, really high highs in general. And I also like to see their cash flow, which is very important. Looking at their cash flow, I like to look at two things: their operating cash flow and their free cash flow. Looking at the operating cash flow has been also going up, really similar to the net income. In fact, this is exactly what I was saying. This is exactly what I was showing you. Look, this is what everyone was complaining about last year because Nvidia was making lower profits with lower cash flows, but you have to understand why. They were investing a lot. So if they're investing a lot, it's likely in the next few years this is going to happen because their investments are going to be cut loose. They're going to be profitable. They're going to come out. So you need to be aware of that. Now, the free cash flow has also been going up. So everything has been going up, including its cash. Its cash has been going up consistently. And what I like to see is that the cash is a lot more bigger than the debt. That's what's important. It doesn't matter that the debt is, let's say, going up. What's important is that the cash is either more than what its debt has been in the past 5 years, or if its debt's been more than the cash, then I try to see that the cash is really getting very close to the debt as it's been consistently going up, but the debt must be now consistently declining. That's the only exception. Now, for the last criteria, I want to see this return on capital and their weighted average cost on capital. So what does this mean exactly? Well, remember that these companies, like anyone, they have to invest. They a lot of the times when they're big, they have to invest in order to branch out to new opportunities. So the ROIC stands for return on investment capital. That means that whatever investment they made in their capital, this is the return that they get. And the weight average cost per capital just basically means the cost of what they had to invest in, right? The average cost. So, of course, what's important here is that the return is superiorly bigger than their average cost of the investment. And you can see it extremely is. In fact, look, their ROIC is 100% and their WACC is 0%. Now, you're not going to have this absolutely perfect, although this is 2024. If we look at 2023, the most recent year, this still counts because whatever the WACC percentage is, in this case it's 12.98%. What I like to see is that at least that the return is at least double to what their average cost is, because that means that they're making 100% on that investment. Okay. Now I know that that's quite a bit of things, but that's what I look at. And make sure that you look at this on annually. I don't look at this on quarterly, because quarterly doesn't show the full picture. You need to look at it from annually if you're going to invest in this company in the next 10 years, because that's the way how I invest, or the next 20 years. Okay, so looking at that, we can tell that Nvidia is a consistently powerful company. Now, that's not enough. What I also look at is looking at Nvidia as its core, which now this is a bit more intuitive, but this is the point about investing, that looking at Nvidia as itself as a company, who are Nvidia's competitors? Okay, so we can actually search this up. Who is Nvidia? Nvidia's competitors, there's a lot more than this, and I'm going to give you some facts. Broadcom is not a competitor. Alphabet is not a competitor. Oracle is not a competitor. Why are these not competitors? Well, because it's simple. Does Alphabet make chips? No. Does Alphabet, by the way, Alphabet is the parent company of Google. Does Alphabet make hardware like Nvidia? No. So that means that they're not competitors. Neither is Oracle, because Oracle is mostly based as a Salesforce platform and cloud platform. Microsoft is not a competitor. Apple is not a competitor. In fact, Nvidia kind of supplies Apple, and Intel is a competitor, but it's not a primary competitor, because the thing about Intel is that Intel's focused a bit in a different area. That's the great thing about this sort of tech industry, that they're involved in a hardware industry, and the particular hardware path that Nvidia is taking is focusing a lot with artificial intelligence, most of all in, let's say, highly advanced GPU structures. Not exactly GPUs, at least what their future projects will be, but similar to the GPUs they have now. And TSM is not a competitor, at least not necessarily, because TSM doesn't manufacture exactly the structure of the, or let's say the design of the chips or the hardware. The only thing Taiwanese Semiconductor is responsible for is that they make the foundation of these hardwares, but they don't make the structure or design. So that's the thing about the hardware and semiconductor industry, that there's a multi-layer process with it. It's not just one company doing everything, it's several companies. Okay? So then who are Nvidia's competitors? Look, the biggest competitor is AMD. AMD is doing almost the exact same thing. I'm saying almost, and I'm going to show you. It's almost doing the same thing as AMD, but I mean in what generally Nvidia has been doing. So AMD, in fact, we can even look at it here. Nvidia has this is the best way to look at it. Nvidia, what are Nvidia's revenue sources? Because that's what's important. Okay, the biggest source is computer and networking. I know exactly what that is. That has to do with multi-layer GPU processing. Like it's basically, it's similar to when, if you guys don't know, if you guys don't remember, back 2 years ago when Bitcoin was at its all-time high, a lot of people were investing a lot with Bitcoin mining, recall? And what did you need? A lot of people were using Bitcoin mining using GPUs, so they can mine those coins using computer powers. Well, in this context, these are really data servers in other ways, but it's not exactly. It's just a way of computing and networking. That's why it's called computing networking, that they're connecting these hardwares into one single unit that's able to compute into these artificial intelligence models, or into these models in general. So that's they're making $10 billion on that. In fact, I'm looking at quarterly, my bad. That's That was on Corday. Is going to say like $10 billion is not a lot, actually. Okay, so looking at 2023, there we go. That's more like it. They made $15 billion on computer networking, and they made 44% in graphics. So what this means is that in general, it doesn't mean the entirety of this, but in general, what they sold in graphics have to do with what they sold in their, well, what is Nvidia is known for. If you guys don't know, they're mostly known for their GPUs, their graphic processing units. They're arguably the best graphics processing units, because that's why Nvidia has been able to succeed a lot. That their GPUs are highly advanced in computing towards visual contexts. They're able to transfer data at a really great way. And that's something that AMD can't do, which is the problem. AMD, which is what I was talking about earlier, AMD, like Nvidia, sells GPUs, right? And they're also getting into AI like Nvidia. But the problem about AMD as its core is that the quality of their products are not that good. They're not that good in comparison to Nvidia because they haven't been focusing so heavily into those processing visual contexts that I've been saying before. Nvidia was able to do that earlier. That's why you're able to see that a lot of the times, in fact, I have it here so I can show you the actual product of this. I have Nvidia's GeForce, and I'm not promoting them or anything, but I'm just saying this as a client that they are good. Like you can see that they've had an RTX. They develop new models, and where, let's say in a gaming perspective or visuals, that you could see better, highly advanced graphics that are compatible and usable with the AI. And that's the thing about Nvidia. Nvidia has been secretly passing these AI models in their hardware software updates, but no one has noticed this until there was a big breakthrough in OpenAI, right? But artificial intelligence has been highly becoming advanced these past 8 years, but a lot of these companies have been developing it, and Nvidia was the one doing that. But the thing is that Nvidia, in comparison with OpenAI, look, I'm going to tell you something. The comparison with Nvidia with compared to OpenAI or any of these other companies is that Nvidia makes their own hardware. That's what's important, guys. It's similar. Like, look, it's very similar. Think about this like if you're going to a bakery, right? If you went to a bakery, it's likely that the bakery food was going to taste better if the materials that they got to make these food items were made inside their shop. It's different if they had to third party access it. That's the difference in comparison with all these other companies that some of these companies like OpenAI have to rely now on Nvidia. And Nvidia as themselves has the power to make those hardware systems. And they have the data as well because they've been acquiring these sort of companies earlier. So that's why Nvidia has been going up a lot, and they've been super profitable. It's not, look, I'm gonna tell you, but I won't be surprised if in the 8 months or the next 12 months, if Nvidia becomes actually the biggest company in the world. It is, because at the rate and pace, look, this is going to happen. I'm going to tell you that the rate and pace that Nvidia is moving at, and most of all the artificial intelligence industry, where people, especially entrepreneurs, are absolutely moving this with urgency and with governments in hand, that there's going to be a lot of companies that are going to explode in these next few years, and Nvidia is going to be one of them. Nvidia is likely going to surpass Apple, I would say, in the next year. Okay. Now, I don't want you to, like, look, what I want you to do is, I'm saying all this stuff, but this does not mean that you should invest into it. Remember what I said. Just because someone does something, because of anyone, does not mean that you should do it. You have to look at the facts yourself. I'm telling you my analysis. I showed you the statements. I've showed you what they do in comparison with their competitors. Their competitors are not the same as this company, and that's powerful. Nvidia is able to work in their own field. They're I usually call this a non-mimical approach, where other companies they just can't do the same products. Like it's similar to like if you look at Apple at their iPhones, they have a non-mimical approach to their products because other companies cannot emulate that same sort of process. And on top of that, when you have that sort of work, you become a brand, right? And when you have a brand, then you start to create this language in people where they only prefer Nvidia than other companies. Or in the case like if you buy a phone, the only phone you're thinking is Apple, right? At least for the majority of people. Some people have Androids, but I'd say the majority of people have most likely iPhones. So that's for Nvidia. Now let's, because you might be saying, okay, but is it cheap? Like, calm down, guys. All right, calm down. I'm going to get to that. Is Nvidia cheap or expensive? Well, let's see. I'm going to say, with a conservative view, just to make this as simple and practical as possible, that Nvidia is going to be consistently profitable in the next 15 years. Okay, and then I'll do the next 10 years if you're even way more conservative than that. So let's type here. This is, by the way, the calculator that we have in selection. You can have access to this calculator if you're enrolled in our courses, but for right now, we're going to use this. So the calculator requires me to enter the most consistent figure, whether it's net operating cash flow, net income, or free cash flow. So let's see. The most consistent figure from here, you'll say is the revenue, but I don't rely on the revenue because the thing about the revenue is that it's gross. It's not net income. You don't know what sort of expenses Nvidia can acquire in the future. So it's important to deduct as much expenses as possible. That's why I love to deduct most of all the operating cash flow, because it's the net end of this, a lot of their investments and their expenses. And if I'm more conservative, I look at the free cash flow. But I'm not as conservative with Nvidia. Otherwise, like if I was, I would do that if, let's say, the debt was a bit higher than the cash and their return on investment wasn't as high, but their products and services were a lot more better. Then I can let that pass. But in this case, I don't have to do that. So the most consistent figure, looking at net income or operating cash flow or free cash flow, they're really the same. Because if you see the operating cash flow, it was lower. Over here is higher, same as net income. Over at 2022, it was lower. But then at 2020, right here, it's higher. So I'm going to say, they're really the same. So I'm just going to grab the net operating cash flow because that's the most consistent way. And their net operating cash flow, at least in the most recent year, which is what I aim to look at. I'm not looking at 2024 because the thing is that it's currently February of 2024. The year hasn't ended yet. And look at what's, insane. They look in a quarter, they made about $28 billion. This is what I said, guys. Look, they invested a lot. And it happened because of this really urgent release. So, yeah, it's important that you have to have an independent thinking, okay? But if we look at 2023, their net operating cash flow was 5.6 billion. So 5,641 million. Each of these figures are millions, so I would enter by that 5,641. 5,641. Their short-term and long-term debt, well, you don't really get that here. In order to view that, we just have to go to, let's say, the Wall Street Journal. Looking at the Wall Street Journal, we can type in Nvidia. Let's look at balance sheet. Now, looking at its cash and short-term investments, this has been about, really this would be 13 billion, my bad. This is $13,296 million. So let's type that in here. Turn 13,200 and what was it? 296. Right, so that's the cash, but in order to get the short-term debt and long-term debt, we just have to go to the liabilities and shareholders' equity. Here it is, short-term debt and current portion of long-term debt. Look, it's been a lot lower, 1.4 billion. So 1,426. Okay. Now, the growth rate. The way how I grab this is I try to keep it as unbiased as possible. The sources that I look at is Guru Focus. In Guru Focus, you can find this if you look at the growth rank and you want to look for future 3 to 5 years EPS. Let's look at this one, the growth rate. So this is 50.35. So they're optimistic, Guru Focus. They're saying that Nvidia is going to grow 50% per year for the next 5 years. So let's put this here, 50%, 35. Then in Simply Wall Street, which is another source. Okay, so Simply Wall Street is saying that they will have a growth rate of 27.3%. So let's put that here, 27.3%. And then in Zacks.com, which is another source, let's put Zacks. Nvidia. They're saying that Nvidia can grow by 17%, so they're a bit more conservative. Expected growth rate, EPS growth for the next 3 to 5 years. Let's put 17%. And then finally on Finvis, let's search up on Finvis. Nvidia. So you can find it here. It's right about EPS. Oh, they don't have one. Okay, that's fine. If they don't have one, then you can go to Yahoo Finance. Okay, let's look at analysis. And it should be right around here, growth estimate. So the next 5 years, that is very optimistic. They're the most optimistic. They think that Nvidia is going to grow by 94.75%. If that's true, then really they're going to be 5x at the next 5 years. Well, no one can know for certain, but that would be great. But no one knows. Okay. Now, this is where I have to give my analysis based on how much I know about NVIDIA. Now, I don't want you to take this with absolutely like a law or anything or just an absolute duty, but this is my opinion because this is my growth estimate. And to be honest, these are just generals of other people's analysis of the company because no one knows. Like, look, analyzing the growth rate of a company is not necessarily a fact. It's most of all just a guess. It's a highly, let's say, educated guess. But in my case, I'm going to really say at the rates that NVIDIA is growing and the way how they use their products and services and I've known them for the past several years and the strategies that they're doing and the industries they're getting into and the products that they're developing, I'm going to say that they're going to grow likely by I'm going to be very conservative in my view. I'm going to say that they're going to grow by 40%, which is high, but I think more, but just to be conservative, it will be 40. Okay, so what this will do is that it will average out all these percentages, and then it gives me 45%. So this is the average of all these percentages. For the next 6 to 10 years, it's just basically half of the next 1 to 5, so it's 22%. And then for the growth rate for 11 to 20 years, I usually grab the GDP growth rate. Okay, so 2.5%. That's what it was, 2.5%. So we can put here 2.5%. Sometimes this changes, but you can put 2.5%. Now, these shares outstanding, which is important because this shows the amount of shares that NVIDIA has for investors to invest in their company. And that's very important to know. So let's check on that. Okay, the current shares outstanding on NVIDIA is 2.47 billion. Okay, so it's 2.47. Oh, it was right here. My bad. Okay, so this is what it is. What the calculator is telling me is that the current price of Nvidia, if we look right now, is at $782. So I don't know why this, although this is a live price, so it should update, but it's at right now it's at 782. I'm not sure why it says that, so I'll change that for the time being at 782. Okay, currently the intrinsic value of Nvidia is $379 net. This is net. The current price, and let me change this to 2024. The current price of Nvidia is $782. What does this mean? Well, look, the calculator is telling me that Nvidia should be worth $379. Like it should be worth, not that I'm guessing, but it should be worth based upon how much it makes and based upon how much it will make in the future, discounted by, in this case, we're discounting it by inflation, which I put here. This is discounted by inflation. Once it's discounted by inflation, which is the difference from here to here, this gives me the net total of Nvidia. But when looking at this, Nvidia is very overpriced because Nvidia is being priced at $782, even though that the valuation of it is very a lot more lower. Okay, so what does this mean? Well, look, I said, like, I'm not going to change these because these are based on other resources, but even if I change my outlook to be very optimistic, like 60%, it still wouldn't be enough. That means that Nvidia, what does this mean? Nvidia is overhyped right now. Yeah, Nvidia is overhyped. Now, what you might be saying, okay, if it's overhyped, then we shouldn't enter. Yes, of course, you shouldn't. But at the end of the day, like, look, just because something is overpriced, and I'm not telling you that you should invest, but I'm telling you that sometimes when something is overpriced like this, and especially what's going on with Nvidia right now, it's likely that, and right now with this rise as they beat their earnings and they're driving a lot of optimism, their stock might go up. But sometimes when something is overpriced, it tends to sometimes go up more. And why does it keep going up? Because of emotional. Like if Nvidia keeps reporting better earnings and they released a product where a lot of people got a lot of hyped, that's going to drive a lot of people to invest on it. But why? This is the important thing that I want to teach you. Why are people, and why is Nvidia's price keep going up even though it's overpriced? Because of emotion, not because of fact anymore. Because of emotion. And when that happens, you should stay away from it. It's very dangerous because once something like a company like this starts to go back to normal, which means that, look, Nvidia cannot support this price because Nvidia is not producing that much like that. It shouldn't. It doesn't have enough to produce the amount the market's trying to price it. People are trying to pay a product for a product that's not even worth that much because it doesn't produce that much. Looking at it from a production standpoint, that's why it's called intrinsic value. It's what it intrinsically can give you. And intrinsically, what it can give us is $379 when people think it can give them $782. You see how that doesn't make sense? But that's because of emotion, because other people are optimistic. Now, I do want to let you know that sometimes a company can decrease the amount of shares they have outstanding. So recall the shares outstanding means the total amount of shares that people can buy that the company is offering. So recall when you buy stock, all the point about stock is that you're claiming ownership of the company. But how exactly are you claiming ownership of the company? By buying its stock if it's public. But what the stock does is that, let me give you an example. If you have a very rich uncle and he's worth like his business is worth about $1 million, and he gives an offer for you and your family of about 6 people that can invest into it, he will let those 6 people invest into it. But the way how he will do that is by distributing stock or shares. He will distribute a sixth of what the company's worth. So 6 portions. So what is a sixth of 1 million? Well, it's simple. 1.5 would be 50%. How much would it get 6 times to get to 100? Well, you just simply do 100 divided by 6, which should give you 16%. So what that means is that there's going to be 6 shares outstanding, and if one person owns one of those shares, they will have ownership of 16.66% of the company. Okay, well, shares outstanding, there's nothing different like that. It's the exact same concept. Nvidia has about 2.1 billion shares. That's a lot, but that's good. There's a lot of diversification with that. There's not one person who controls a lot. There's a lot of shares for many people. But what happens is that, think about it like if your uncle decided to say, there's not going to be 6 shares anymore, but there's now going to be 4 shares. What does that do? Well, if you still have one of those shares, your share ownership percentages have gone to 25% from being 16.6%. Why? Because a fourth of the portion of the company is now 25%. So you now own 25%. Well, this happens exactly to a company. If Nvidia, this is why I'm telling you, because I just want to give you the fact that even though Nvidia is overpriced, they could reduce the shares, which could help a bit more to invest in the company, because that will help readjust the market price. So if you claim more ownership, what does this do exactly to the share price? Well, looking at the calculator, remember when we put shares outstanding, we put 2,470 million shares. However, the thing is that the intrinsic calculator is getting all the amount of money Nvidia is going to make in the next 15 years, and it will divide it by the amount of shares, which means, what that basically means is how much each share is going to make, which is the whole point. If you're buying a share, you want to make sure how much you can make with that share. Well, it makes sense. If the shares outstanding is less, then clearly the share price, the intrinsic value price, is going to be worth more. Because, let me give you an example. If you grab, let's say, $1.3 trillion, this is just as an example, 1.3 trillion, I know that's a lot, but this is just as a real world scenario. But let's say $924 billion and divide it by 2,470. You're going to see that the amount should be somewhat around $380, like somewhat around, not exactly. It could be 370, just within that range. Well, if you now recalculate it and put $924 billion, as I just said, the same thing, but now divided by 1,000, you're going to see that it's not going to be $380 anymore. It's going to now be 700. So that means the intrinsic value went up. Why? Because they're worth more. Think about it. If the uncle now only has 4 slots and one of those shares can give you 25% of the company ownership, then of course it has to be worth more, because you're claiming more of the ownership. This is no different. That's why I said that this method can work. So you have to do the calculation. There's not an exact amount how much they have to decrease it. And nonetheless, if Nvidia does do it, don't worry, I'll make a video soon if I do see Nvidia to be cheap again. But until now, Nvidia is pretty expensive. So, what can you do? Well, let me give you some wise words. I wouldn't buy Nvidia right now, but I wouldn't short it, because a lot of the times when a company like this is in this context where it's not doing anything bad, it's doing good things, it's growing a lot, but people are thinking that it's worth more than what it is. And when that happens, you want to stay away from that. Okay, there's a saying which I liked what Charlie said, and this is based on a investor standpoint, not by an entrepreneur standpoint, but by an investor standpoint, which is relevant to this, that you do not want to underestimate the man who overestimates themselves, because a lot of the times they can be right, and of course sometimes they can be wrong, but they can be right sometimes, and that's what I think about this. Okay. Now, I am going to tell you, but I'm not going to give a full detail, maybe in the upcoming lessons, but I want you to analyze. I'll give you some other bonuses companies. There's a company called ARM. I've known it for the past 2 years. It's a very powerful company. You can see it rose exponentially for these past several months, and I know why, but I want you to do the research. And you can also search up this company. It's called ASML. It's very powerful. And you can also search up TSM. Okay, so that's it for today, and I gave you a deep analysis about the company Nvidia. If you are interested to learn about more from this, like investing, you can look at our website and even schedule a call with me down in the description below, and I can show you how to invest or trade based on your style. Okay, that's it for today, and I'll see you guys tomorrow. Bye.